Welcome to Accounting 403, or ACC. It's actually Auditing, Lesson 2. And in Lesson 2 today, we continue our discussion of the tax laws relating to partnerships. There are 3 pages of readings from the e-text. I would suggest copying these off and bringing them to class as well. Page 37, page 52, and page 48. And we will examine them in that order. The first reading looks at the general tax considerations that arise from sale of a partnership interest. Frequently, a partner is ready to retire, will sell their partnership interest. The question is, are there gains or losses due on the sale of this partnership? We also considered the different ratios that apply using the partner's basis, that is, the percentage of ownership. Some interesting issues arise due to sale of assets that are contributed property to the partnership. On page 52, we look at a set of 4 issues involving tax-exempt organizations. Students should note that many for-profit businesses also operate a tax-exempt foundation or trust that handles the corporate charitable activities. This is often seen when a manufacturer contributes a portion of each sale to some popular cause. So if you buy our product, we'll give 5% to the environment or some other item that we hope stimulates the public to buy our product. Types of corporations covered in this section include the 501(01), 501(02), and 501(c)(3). I think those should be actually 501(c)(1), (c)(2), and (c)(3), but the text has a typo in it. There is also a 501(c)(4), and we'll make brief mention of that as well, although it is almost never discussed among accountants because it is exceedingly rare. However, I had the good fortune to serve on the board of a 501(c)(4), so I learned a little bit about the tax law that may not be included in your text. Page 48, finally, presents the gift tax and various exclusions. Class discussion is prompted by 4 discussion questions listed in the Lesson 2 outline. We'll take a look at those in a moment. Some of this material we will research during class, so please bring a laptop or tablet that is internet enabled. We will also review the learning objectives from Lesson 2. So the discussion is following these 4 items. Number 1, discuss the application and exemption of partnership contribution special rule compared to the corporate special rule. And these would be sections 721 and 351. We'll try to research those in class. Number 2, discuss the holding period of partnership property. How long do we have to hold property before we can dispose of it? And item 3, discuss the concept of a partner's unlimited liability of partnership. Here again, we want to look at are there any limitations to this unlimited liability, and if so, what are the circumstances? And finally, number 4, a partner's original basis is generally determined by the manner in which the partnership interest was acquired. Discuss the effect of changes of a partner's business basis. And of course, basis can change as the partners renegotiate their ownership shares among each other, particularly when there is contributed property or cash by one partner. These topics are available and discussable using some very easily researched online items. Lesson 2 also includes 3 learning objectives. Briefly, they are: number 1, understand the general rule of contribution to partnership, and that's where we come to the special rules, section 721 later on. Number 2 is recognize the holding period of partnership property, and we will also Google that particular item and see what additional information we can dredge up from the internet. And finally, learning objective number 3, explain the change of a partner's basis. What occasions that change? How is it handled and recorded? How does it affect the taxes of the partnership? So this should be a fairly challenging lesson because we're going to be supplementing the text from materials available to us online to reach a fuller understanding. The material in the text is quite cryptic and incomplete as far as understanding, so we'll take a look at the underlying issues and definitions that arise from our discussion of corporate taxes, particularly those involving gifts. That brings us to the conclusion for this lesson. I will post the script and the video. The script does not contain everything in this video, obviously, and we will continue our researches in class on Tuesday. I look forward to seeing you then.